The cryptocurrency hit an all-time high in October. But then sentiment was rocked when Donald Trump announced an extra 100% tariff on Chinese goods, creating anxiety in financial markets. The price of Bitcoin plunged and is now down roughly 30% since its peak. Concerns are swirling around a decline in so-called crypto whales, investors holding more than 1,000 Bitcoin, also selling out.
I suspect that what's behind it is a growing perception on the part of people who've previously bought Bitcoin that it has run way ahead of any plausible interpretation of its potential value, and particularly for those who've established positions in Bitcoin or other cryptocurrencies with borrowed money.
When the value of the asset purchased using borrowed money falls below a level the lender is comfortable with, the investor may be asked to stump up cash in what's known as a margin call, sometimes by selling the asset they've bought with the loan. Saul Eslake says billions of dollars have flowed out of Bitcoin exchange-traded funds, or ETFs, as margin calls grow.
Those outflows are increasing in size, and that's why the price has fallen so much over the last few weeks.
The price of Bitcoin climbed roughly 4% over the weekend. Analysts say after all the negative news, a hint from the US central bank that it might cut interest rates at its December meeting enticed investors to jump back in.
Obviously, the Trump administration will be putting considerable political pressure on the Fed to cut rates, but the Fed, so far at least, has maintained its independence, and it will do what it thinks best.
The key question is whether Bitcoin can scale new heights.
Since Bitcoin doesn't return any income, it doesn't pay interest, it doesn't pay dividends, and it has no intrinsic value. If you don't believe it's going to keep going up, why hold it?
But for some, riding the wave is enough. But risks remain ever present in this highly volatile market.